Hello, welcome to another video, Forex lesson number 8. Make sure you go through all these videos. Lesson 1, you must read that book, Master the Markets. That is lesson 1. Then you have to read lesson 2, read the book Volume and Open Trust by Kenneth. Okay, then you have to go through lesson 3, then lesson 4, then lesson 5, then lesson 6, then lesson 7. Make sure you go through all these lessons. The book I recommended actually are available on the Google. You can Google them, download them, read them. Okay, make sure you cover all those basics which are discussed in these 7 sessions, in these 7 lessons. Now let's come to the practical. Before moving forward, I make sure that you read the book Master the Market. This book you read this book, Master the Market. It's available on Google. You just Google it, Master the Markets by Tom William, written by Tom William. This is written by Tom William, 1993 or 1993 to 2009. Okay, so read this book, that's very important. They actually do some publicity on their book, which is a trade guider software. You don't need any software. Don't buy any software. You don't need any software. Just listen to me, what I am saying. Okay, now read this book. Go to down. Okay, I already discussed all these things in my lecture 1, lesson 1. You can check that out. In section 1, the random walks and other misconceptions. So what misconceptions do you have in regarding the market and regarding this logic of the market? The author Tom William basically covers that in this topic. Then he covers what is the market actually, what is the market. Okay, so he covers that topic. Then what are the market professionals? Market professionals are those, like we can say smart money players, big players, or composite operators who are actually making money in the forex market and have a edge over, have a priority, or have a proper edge and proper power rather in comparison to retail trader. Okay, then you will talk about market makers who actually provide the liquidity in the market, and then you go through volume. Volume is very important. Okay, so there are 2 types of volumes. Like in stock market we have a real volume, like how many number of shares sold or bought in a particular day is called day volume. That's a real volume. So in forex we use a tick volume. Okay, so tick volume basically is the how many times price fluctuate within the candle of that particular time is called tick volume. Okay, then understanding the volume, what is bullish and bearish volume, accumulation and distribution, strong holder and weak holder. Strong holders are actually players and weak holders we as a retail trader. Then crowd behavior at resistance level, supply and demand. Market basically moves with supply and demand in balance. When there is a more supply, market will go down. When there is a more demand, market will go up. If demand overruling supply, then market will go up. If supply overruling demand, then market will go down. So how to tell if the market is weak or strong, identify buying and selling, go through all these topics. Okay. Now in this lesson I will go to my trading view and I will start my practical version. Okay, so you just need to open any chart. I opened the chart of gold. It's moving, it's a 5-minute chart. It's a 5-minute chart. I open it and just open a candlestick chart. Just go there and open a candlestick chart. Okay, you open that. Now market, nobody is controlling market. Many people say that players are actually big players, smart money, hedge funds, big banks, central banks, and that is etc. are actually controlling the market. No one is controlling the market. Yes, there is smart money in the market. Smart money in the market knows the market very well. They know what the market is doing and what it can do in the future. They utilize the market move more effectively than us. Okay, who are the smart players? Smart players or smart monies are those guys who have a deep pocket, big accounts, have a proper knowledge and a proper team, experts who can do proper analysis for their for them, and they utilize these best knowledge, best data, and best experts to in their trading benefits, in their trading decisions. So players or smart money is not controlling the market. Smart money is actually using the market conditions very well. Wherever market go, they know how real that move is and where they have to put money on. There is what smart money is have an edge over retail traders. We retail traders do trading on emotion. We have a FOMO, fear of missing out, or greed or fear. But smart money enters the market in a very calculated way. And when they enter the market, they make sure that they are on the right track in the market. If market allows them to do that, then they enter into the market. They never go against the market. They now understand the market very well. If market is weak, then they will not buy. If market is strong, then they don't sell. They actually use the market condition in their favor, whether through best data, whether through best understanding of the economy, whether they know the news very well before it coming, or whatever they have strategy. Now we are a retail trader, so what we can do, either we have a strong data. We currently have this data which is in front of us. We have no special data in front of us, and we have a limited amount of money in our trading accounts, and we don't have time too much on the charts to stick on the charts. We are doing our jobs in our home, busy with families. Now the method we are using, I am covering here, is volume spread analysis, VSA. VSA, basically what VSA is an approach in which we use volume and candlestick charts and we interrelate them to make a sense that what players are doing. So VSA, volume spread analysis, is actually a method that will help us to judge or identify the footprints of smart money, footprints of big players. Whenever big players or smart money enters into the market, we will be able to identify them through charts. That's what this lesson is all about. So if smart money is entering into the market, or big player or whale or whatever big players, if entering into the market, who is smart money? Those guys who are making money from the forex. We collectively call them smart money. Who is actually making money in the forex market consistently. We collectively call them as smart money behavior. Now, what we as a retail trader have to do is to track the footprints of smart money from the charts. Okay, now you have questions like how we can track the footprints of smart money. That smart money is buying, I will also buy in my trading account. Smart money is selling, I will also sell in my trading account. So what smart money is doing, you are also doing that. So if smart money is getting profit, you will also get profit, because smart money mostly go right. Okay, and you will get profit. So that is what volume spread analysis is. It's basically an approach in which we interrelate volume with the candlestick charts, and we find the understanding of the smart player behavior, and we trade in harmony with them. Okay, you got the point. Now one question you have, that we have tick volume in the forex market, we don't have a real volume in the market, but how we can apply? Actually, point is how we can track the smart money from the chart. Actually, there is one thing common in the smart money. They two thing common. One thing is, they smart money, wait a second, smart money they buy on sell candles. Means if market is going down, you have in your mind that player is buying. They always go against market to enter. So smart money, what they do, whenever there is a news, bad news, market will go down. Whenever there is a fundamental news, any news, bad news regarding gold or everything, market will go down. Then if market is go down, then they actually do what they do, they buy in that dropping market, that bearish market. And retail traders are actually selling the market because they have news in their mind, that some fundamental news in their mind, that market is weak, data is weak, and market will go down. So they sell. Smart money or big player thinks it's not, this market is not too bearish, this is not too weak, this current news will neutralize later on, so they actually buy. So smart money actually buy, they keep buying on the lows, and the retail traders are actually selling. So smart money always buy on sell candles. Smart money buy sell on buy candles. Now this is another point, that smart money, if they want to sell their holding, if they want to sell their position, they wait for market to be strong, so they basically sell on buy candles. So that is a common behavior of smart money. They buy on sell candles, they sell on buy candles. Opposite. They go against the retail traders. Okay. Now, one thing they cannot hide. So we as a VSA trader, volume spread analysis trader, what we will do, we will keep eye on their footprints, what they are doing, and how we can identify them. Basically, smart money, they have a big accounts, they have big orders to put into the market, and when they put big orders into the market, volume spikes because they cannot control the volume. Even if they buy in a small blocks consistently, still volume rises, volume spikes. So volume is the indicator that will help us to track the footprints of smart money. So you have a question that we don't have getting the real volume, there is a tick volume on the forex market. So how we can tackle that? Actually, tick volume is basically what they do. When they trade in the forex market, they have a huge order, they break down into small pieces and inject into the market. And when they inject, price will fluctuate. When price will fluctuate more, then tick volume, what basically tick volume is? Tick volume is actually the fluctuation of the market in particular candle. So when market fluctuates more, then there is a high volume in that candle. So when we saw the real volume versus tick volume behavior and compared that, we identify that both have the same behavior. What tick volume behavior is, actually more or less similar to the real volume behavior. So we use tick volume as a proxy of real volume. Okay. So how we can track the footprints of smart money? We will read the volume indicator. Okay, and volume indicator, which one? Tick volume. Tick volume. We will use tick volume. Now you have a question. Which broker volume? There are a lot of brokers. Which broker provide the best tick volume? I will answer that. Two brokers. First is ExiTrader. ExiTrader provide the best. You should log in ExiTrader on your mobile, open a demo account on ExiTrader and put that login on your mobile, and you can see, you have to watch the volume of ExiTrader. I recommend that. Or Onda. If you are using TradingView, then Onda volume is better. Okay. So these two broker provide the best volume, tick volume data. Okay, so let me open Warna chart. This is a Warna chart of gold. Okay, this is a 5-minute chart, and okay, so you have to use ExiTrader volume okay, for this strategy. Now this is the chart of gold. Now you have to go to indicators. Here, write here volume, and you will get a volume. You write here volume, you will get a volume indicator. You click that. Then this volume indicator is appeared in the below as a histogram. So these green and red bars actually this green and red bars actually mislead you, but that color does not matter. Color does not matter. Okay, color does not matter. Now this is a tick volume. This is our tick volume which I am getting here. So this tick volume which I am getting here on the below bottom is actually a way to reach the footprints of smart money, that what smart money is doing in the market. And what smart money is doing, we will also trade in the harmony of smart money to make up decent profits. So here comes this lecture which I am this lesson is all about ultra high volume. This lecture is all about ultra high volume. Ultra high volume. This lecture is all about ultra high volume. Volume which is very huge, which is very tall, which is very spiky, is actually the sign that players are into the market. So this ultra high volume is basically that volume which is very unique, and which is a lot bigger than the average volume, and that shows that smart money is something doing here. Okay, so these lectures are about ultra high volume. What ultra high volume is? This is a tick volume on the bottom. Ultra high volume, start with the H1. Okay, I started with H1. Now these two bars are ultra high volume. Check this. This volume is bigger than previous 10 days, 10 hours, 10 to 12 hours, or previous day, within day. These two volumes are bigger. Okay, so this is a ultra high volume. This is a ultra high volume. Ultra A volume, any volume on the candle which is greater than previous 10 to 15 candles. Any volume which is greater than 10 to 15 volumes is a ultra high volume. Okay, that's very important. So these are ultra high volumes. This is ultra high, this is ultra high volume, and this is ultra high volume. So go back to in the history, and this is ultra high volume. You got the point? Look, these two volume are greater than previous 10 to 12, 10 to 12, 10 to 12, 15, or even throughout the day. These two volumes are larger or extraordinary higher or spiking. So that's more than average. That's above average volume, not an average volume. So that's an above average volume. So that's that we call as a ultra high volume. Okay, and these normal volume we call as an average volume. This is average volume. These are average volumes. Okay, and these are called low volumes. Okay, so basically we place three lines. This is low volume. Okay, and this is average volume, and the spiking volume is here. This is an ultra high volume. So we basically plot these three lines, and we are identifying that these are the ultra high volume. Okay, a volume which is bigger than previous 10 to 15 volume is called an ultra high volume, huge volume. That is why market actually jumped, because ultra high volume basically tells that smart money is something is into the is smart money is active in the market. Ultra high volume tells you smart money is active in the market. And look that, do two sell candles and two ultra high volume, and I told you that smart money do buying and sell candles. What smart money do? Smart money always buy in sell candles. So what smart money did, they actually bought on these two candles, sell candles, and market started to go up. Check it out, market gone very up. Market started a huge trend. So what happened there? Their market dropped quickly. Retail traders got panic. Retail traders were selling. Smart money took the opportunity. Smart money was buying. Obviously, if market is there, then someone is buying and now someone is selling. So maybe some news there, and suddenly market collapsed, dropped down. Retailers start selling actively, highly in panic. And what smart money thought, that trend is still intact, we have opportunity here, we feel that market is still strong. They actually bought against them, and that is why the volume spikes, because smart money is active at this stage. And when smart money is active in this stage, we will see ultra high volume ultra high volume tick volume on those candles. So these are ultra high volumes, these are average volume, these are low volume. So there are three category: ultra high volume, average volume, low volume. So what we have to do, we have to judge what is ultra high volume. Okay, so let me delete that. So that's a so let me tell you what is ultra high volume. That is ultra high volume because this volume is very bigger than previous 10 to 15 volumes. You have to compare volume with previous 10 to 15 in H1. In 1 hour candle, in 1 hour time frame, there are a lot of time frames like 5 minute, 15 minute, M30, H1. Don't go above H4. daily, weekly, monthly. We don't need to go. Our strategy will work on H1 or less time frames. We don't go in 4H, daily, weekly, monthly, or we will work only on H1 and lesser time frames. Okay. Now, this is a spiky volume. This is a tall volume. So it means that there is a lot of transaction going on and smart money is active at this place. That is why price actually gone up from there. Price took support here and price gone up from there. So look at the sell candle, ultra high volume. In sell candle, if you see a ultra high volume, that means smart money is buying there. Okay. That's very important. What smart money do? Smart money buy on sell candles. Smart money sell on buy candles. Does the opposite of the candles. So this is a ultra high volume. How it is a ultra high volume? We compared it with previous 10 to 15 volumes. If it is bigger, then it is a ultra high volume. Same as this is also an ultra high volume. This is also an ultra high volume because it is bigger than previous 10 to 15 hours. So it is an ultra high volume. Go on. This is also an ultra high volume because it is bigger than previous 10 to 15 volumes. So it is an ultra high volume. So we place that there. That is, I am discussing the time frame of H1. Okay. To track the ultra high volume is first objective for you to be a successful trader, and because you are following the method of volume spread analysis which I am teaching you, you have no confusion. You should have you should have no confusion in identifying the ultra high volume, because when you identify the ultra high volume, that means you are actually tracking the smart money or footprints of smart money, and you are watching the market when market is actually getting purchased by the big players. Okay. Now this is ultra high volume. Got it? This is H1 time frame. Okay. You can zoom out. Okay. You can compare more. Okay. This is ultra high volume. This is an ultra high volume. Okay. This is an ultra high volume. This is an ultra high volume. Simply any volume which is bigger than previous 10 to 15 volumes is an ultra high volume. Simple is that. Or any volume which look so tall or spiky among previous volumes is an ultra high volume. Simple. Just we have to identify in the market the ultra high volume. Okay, because ultra high volume is the key to know that smart players are active in the market. When smart player is active in the market, they come into the market with a big order, and when they come into the market with big order, then volume spikes up. When they inject their big order into the market, volume spikes, and that spiky volume we call it as ultra high volume, which is an indicator of smart money. The smart money is actually interested in this place. Let's discuss later whether they buying or selling, but at least they are smart money is active. Now what they doing, either buying or selling, we will see it later on. I will share with you the proper strategies by which you can take the entry of buy and sell later on. Just know the logic of ultra high volume first. So this is an ultra high volume, then this is also an ultra high volume. This is also an ultra high volume. Then this is also an ultra high volume. Okay, got it? Then we go in the history. This is also an ultra high volume. This is also an ultra high volume. So these are the places, that is a ultra high volume, that is ultra high volume, that is ultra high volume. Just compare with previous 10 to 15 volumes, you get the ultra high volume. So basically in volume spread analysis, VSA, you have to identify the ultra high volume in the market. When you identify the ultra high volume, you will now have an idea, or you should be sure that smart money is active in the market at this time. When smart money is active in the market, either they buying or selling. So if ultra high volume coming in the sell candles, you have to admit that market is actually smart money is actually buying into the market, because smart money have a behavior. They sell on buy candles, they buy on sell candles. They do the opposite of the candle. If candle is green, there is ultra high volume, mean in this green candle market is, they are, let's look at this. Look at this. This is a red candle. This is a look, this is a red candle. This is a red candle. Look at that. This is a red candle, red candle, bearish candle, and volume is very high, ultra high volume. I told you that smart money basically does that. Smart money buy in sell bearish candles, buy on sell candles. So here something happened. In this area something happened. Smart money was active in this area. So in sell, if candle is bearish and there is ultra high volume, that means smart money is buying. And what happened? Market gone up. Again, on sell candles there is ultra high volume. Again they bought at this place. Smart money have a behavior. They buy on sell candles. What they do? They buy on sell candles and they sell on green candles. Okay. So here also this is ultra high volume. On sell candle, market gone up. So if you identify the ultra high volume and associate it with the candles, then you have an idea that what smart money is doing here. And if market's ultra high volume appears on sell candles, you have in your mind that smart money is buying. If ultra high volume is coming on buy candles, then you have to admit then that market is, they are selling into the market. Okay, let me show you. Actually gold is very bullish, so look at this place. There is a two green candles and ultra high volume. Look at this, ultra high volume. There is an ultra high volume, ultra on this candle. Candle is green. That means they are selling at this place. If next candle goes down, that will confirm that market is, they are selling into the market, and market is now turning its position. So what happened? Market dropped after that. Okay, so whenever there is a, again in green candle there were sellers, market gone up and then collapsed down. Okay, so that's very important, that in green candles, whenever there is ultra high volume, that means smart money is selling. In red candles or bearish candle, if there is an ultra high volume, that means smart money is buying. Look at that. In these two candles, in these two sell candles, there is an ultra high volume. There is an ultra high volume. Look at this. There is an ultra high volume. Now there is an ultra high volume, and I told you that whenever there is a bearish candles and there are ultra high volumes, you will have in your mind that smart money is buying. That does the opposite. They go against the candle. I mean, what candles is showing, they are actually doing the opposite orders against the retailers. Candles is basically the representation of retailers, and big players are actually, if their volume is spiking, that means that big players are active and they are trading against those retail sellers. And when retail sellers dried up, they dried or tired, then market will go in the direction where the smart money was thinking. Obviously, smart money was buying on these red candles, and they know that in future market will go up. But on the moment, these retailers just sold their positions or sell their positions or sell into the market for whatever reason. There is a news or market breakdown, this sport or whatever. But smart money, if there is volume spiking, then that's ultra high volume. So picking the ultra high volume is very important in volume spread analysis, because that shows that smart money is active in the market and smart is doing something, either buying or selling. So what they're doing, we will see the candles. If candles are green, then smart money is mostly selling. If candles are red, then market is the smart money is actually buying. So that is the simple case. If there is ultra high volume on bullish candle, then that means smart money is selling in the market. It's not necessary. Sometimes they buy in bullish market, sometimes they sell on bearish candle, but 80% time, if there is ultra high volume and on bearish candle, then 80% time market smart money is actually selling in the market. And when there is an ultra high volume, when there an ultra high volume on sell candles, then that means smart money is buying. Okay, so these two are the basic principles here that you have to use. Now let's go to some other time frame. You can apply this knowledge on all instruments, but I told already that this volume spread analysis worked best on gold, Bitcoin, oil, Euro USD, AUD USD, USD CAD, USD JPY, and GBP USD. You just have to select these main instruments. Don't apply this volume spread analysis knowledge in stock market or in indices or any other market. Just apply what we said you to apply on. Okay, apply this strategy, this method, VSA, volume spread analysis, on oil, especially on gold, then on Euro USD, then on GBP USD, then on USD, AUD USD, USD CAD, USD JPY, Bitcoin, oil. That's it. Don't apply this on Nasdaq, US 30, cross pairs, stock market. No. Okay, so this strategy has some limitation. You have to accept that, and you have to work on those instruments where it works best for you. Okay, now we go to M30 time frame. Now H1 time frame was easy. Now as we move to the lower time frame, the we will see some tricky situations. Now I moved into the M30. Now where is the ultra high volume? Let me zoom out this chart. Okay, now where is ultra high volume? These are the ultra high volumes. This volume is bigger than previous 10 to 15 volumes. This volume is bigger than previous 10 to 15, or bigger than the throughout the session or throughout the day. You have to compare. If you are in a US session, you have to compare volume with previous whole day, with current whole day, like in UK session, Asian session. If volume is greater than previous 10 15 volumes in H1, listen, if you are trading on H1 time frame, if you are trading on H1 time frame, 1 hourly time frame, then you have to compare the volume with previous 10 to 15 volumes. If volume is bigger than previous 10 to 15, it means that that's a ultra high volume. That's a ultra high volume. Okay, now let's start the ultra high volume here. That's a ultra high volume. That's also ultra high volume. These two candles, these two cell candles, they both have ultra high volume. Ultra high volume 1, ultra high volume 2. These both are ultra high volumes. So look, smart money was active at this place. That is why that's clearly showing, the chart clearly showing that there is a ultra high volume of cell candles. And what happened? Market gone up. Market gone up. Again, market came down. There was an ultra high volume or cell candle. Market gone up. Now the market going up. There is a sell ultra high volumes on buy candles. So we will believe that market will go down. Okay. So it's clear in front of you. Now let me go to history. Look at that, man. Look at that. Look at 3 ultra high volumes. Clear cut, 3 ultra high volumes. Ultra. 3 ultra high volume, 3 consecutive ultra high volume. Look at, compare them with previous 10, 15, 30 candles or 30 bars. Compare these volumes with previous volumes 10 to 15 or 20. It is an high spiky 3 consecutive volumes. That means that smart money was doing something at this place. You have to check the market on which, you have to check the candle on which ultra high volume is coming. If candle is if there is a sell candle on an ultra high volume, that means smart money is buying. And what happened? If market jumped from here and jumped, market is gone up almost $2,000, 1,000 pip. Okay. Again here, these are sell candles, and this is an ultra high volume. This is an ultra high volume. And what happened? Market gone up. So what happened there? Why markets took support there and start going up? Because there is an ultra high volume coming on those candles, and those are the sell candles, mean that players are actually buying there. Players are actually bullish on the market, and they are hiddenly buying there. So that's why volume is spiking, and market when started drifting up, so you have to look for the bullish opportunities in market going to up. I will tell you the strategy how to buy or sell in my coming videos. So don't worry about buying and selling. Just get the concept of what is the ultra high volume. Okay. Look here again, both candle ultra high volume on red candles, market gone up. Okay. There is again 3 to 4 ultra high volumes. 3 to 4 ultra high volume of this area. On this area, these 4 candles, 4 ultra high volumes. And what market did? Market turned back up and then goes down, and then huge rally. Why? Because they were buying at this place. Okay. Now look at this. Market is going up. There's an ultra high volume on buy candles. These are 3 buy candles, and all of 3 candles have high volume, ultra high volume, which is bigger than previous 10 to 15 volumes. So that is an ultra high volume. So if an ultra high volume comes on bullish candles, if an ultra high volume, I call ultra high volume UHV. So if I write UHV, it means ultra high volume. So that's an ultra high volume coming on these green candles, and when ultra high volume comes on green candle, that means market is bearish. Market will go down. And what happened? Market gone down aggressively. Gone down. Okay, got the point. Here market drop down, ultra high volume is coming, that means player is buying. These are sell candles, and sell candles have ultra high volume, the volume greater than the previous 10 to 15 volumes. That is a ultra high volume. This is a 30-minute chart, 30-minute chart, and these are 30-minute candles. Both have a ultra high volume, and these are sell candles, mean smart money is buying. And what happened? Smart market gone up. That depends. Either it gone up very huge, or either it gone up slightly. But you will see that you will get trade. You know better that smart money is active here, and something is coming up. Whether there is will move up or down, and if there is a sell candle and a high volume on it, that means that there is a more probability that market will go up. Again, these are the 2 sell candles, and there is an ultra high volume in both, so market gone up. UHV means ultra high volume. Okay. UHV mean ultra high volume. So in M30 or H1, you have to compare the volume with previous 10 to 15 volumes. If volume is bigger than previous 10 to 15 volumes, it's an ultra high volume. Or if you zoom it out, and if you see that volume is spiking, that is ultra high volume. Any volume, any abnormal volume in the market which is bigger than the previous average volume is an abnormal volume, and we call it as a UHV, ultra high volume. This is a tick volume, or it means that smart money is active at this place, because smart money have a big account, and smart money inject big orders in the market, and when they inject big orders in the market fluctuate more quickly, and when for market fluctuates more in less time, that means that tick volume is spiking, and tick volume and spike up, showing that players are active in this market, and they are actually active, and they are buying there because they think this trend is strong up, so they are want to join this trend, and they use this drop, maybe some news there, market drop, few retail traders sold their position, that's why market came down. But players were actively buying there, market gone up. Same happened there, same happened there, same happened there, same happened there. Because you know better that gold is a bullish currently today. Like I am making this video 25 April 2025. So we have a strong bullish trend on gold. So that's why this behavior is very clear. Same behavior will happen in oil, in Euro USD, in Bitcoin, in AUD USD, USD CAD, USD JPY and others. Same behavior will happen. Okay, you got the point. So let me go back. Look at that. Market is coming down. These are the 3-4 candles. Market is coming down. These are the sell candles. These are sell candles. Check it out. These are sell candles. On all candles, there is an ultra high volume. 4 ultra high volume. 4 UHVs. Okay. Now what happened? Market turned sideways. Market start moving sideways. Stopped coming down. Start moving sideways. And market started going up. Up. What happened there? Because they were buying at this place, smart money. Because they buy on sell candles and they sell on buy candles. Again here, okay. So you got the point. Look, there is a ultra high volume or green candles, ultra high volume on green candles, spiky volume on green candles, and market, what market did? Market gone down because they sell on buy candles. Again, the ultra high volume on green candles, 3 candles. That's ultra high volume UHV, UHV, and this is also UHV. So market came down because they were selling in this buy candle. Why they sell on buy candles and buy on sell candles? When you read this book, Master the Market, and if you read all these section coming down, all this section, if you read that, read till this section 4, 119 pages, you will got my point. Then how market sell, how player will sell in bullish candle, why player buy on bearish candle. If you read that book, Master the Market, and you read this 119 pages, you will understand everything, that why player actually does that behavior, that they sell on buy candles and they buy on sell candles. Okay, so moving forward, let comes to the M15. Now there is something tricky here. Now H1 and M30 was easy, we were comparing, but as we moving in lower time frames, we have to identify that which session we are trading. Either we are trading in US session, or we are trading on which session we are trading. Okay, that's very important. Okay, like in Asian, if you are using M15 chart, okay, behavior is in let me tell you. In Asian session, market volume is small because that is a small market. In Asian session, AUD, JPY, New Zealand central banks involved in that session. So market volume is small because US volume, USD and Euro and GBP, those countries or those currency or those central banks associated with them, they are actually not operating. So volume is actually small on smaller scale at on those sessions. When UK session open, then volume is slightly bigger than Asian session, and when US session open, market is volume is more bigger than UK and Asian. So whenever you compare the volumes, you have to see that which session you are trading. You have to compare the volume with that session. You cannot compare the volume of UK session with Asian session or US session. You have to compare the ultra high volume of that particular section. Okay, that's very important. So let's come to the point. Now this is ultra high volume coming on buy candles, then same on sell candles. So in buy or sell, both there is ultra high volume, both UHV, ultra high volume. There is also an ultra high volume. Okay, this is also an ultra high volume. That means smart money is doing something there. Look, market gone up from there, market gone up there. Okay, market gone up there. Market was coming down, there was a 2 ultra high volume on 15-minute time frame, and market turned up because, okay, now market is going up. There's an ultra high volume which is bigger than previous 20 bars. If you are trading on M15, you have to compare the volume with previous 20 bars, 20 to 30 bars. Okay, if you are trading in M30 or H1, then you have to compare volume with previous 10 to 15 volumes. But if you are trading on M15, you have to compare it with previous 20. So if I compare this volume with previous 20, then it is ultra high volume. So I will write there a UHV, and it's coming on buy candle. That means market will go down. Simple, no confusion. Now market is coming down, sell candle, sell candle, sell candle. This is an ultra high volume on all candles. So that means that market is going up. Okay, simple. Now let me, ultra high volume there, ultra high volume there on these two candles, there is ultra high volume. Okay, market gone up, slightly up but at least gone up. Market's gone up. Look, ultra high volume. Compare it with previous 10 to 15, 20 volumes. Compare the volume with previous 20 volumes in FM15. Then you will get that it is a ultra high volume, UHV volume. Okay, this is a UHV. Okay, that is also a UHV, but did not. In volume spread analysis, we actually trade in within the trend. If there is a green, there is a high volume on green bar, that's look like green but not a green. So that's very important, that which candle you are looking. Clearly that's our ultra high volume. Clearly that's our ultra high volumes, because these 3 volumes are greater than previous 30 volumes. So that is ultra high volume, and that's appearing on a bearish candle. That means players are buying in there and market will go up. Got my point? You have to compare volumes with previous 30 volumes. If volume is bigger than previous 20 30 volumes, then is an ultra high volume. Or you have to compare volume with with that day. I mean, if you are trading, then compare it with previous 20 volumes. That's enough. Okay, 20 25 volumes. Then that's a ultra high volume. Simply you just zoom it out. You will see all UHV volumes. Just zoom it out. I will tell you, this is a ultra high volume. This is ultra high volume. This is ultra high volume. This is ultra high volume. Just zoom it up. This is a ultra high volume because it's bigger than previous 20 to 30 volume. Still it is an ultra high volume. That is an ultra high volume. Okay, you got the point. Now let's come to the M5 5-minute time frame chart. Ultra high volume concept, I am telling you, applies same on all instruments which I told you, like gold, oil, silver, Bitcoin, Euro USD, GBP USD, USD JPY, USD CAD, USD JPY, major pairs. Okay. Wait a second. Okay. Now in M5 there is some tricky part, which is when you come to M5, then you have 3 category of volumes. Okay. Let me tell you in M5 what is the funda of M5. From where market started, let me tell you. Market started from here. Let me put the vertical line. Market started from here. Okay, market opened from here. This is our Asian session. This is an Asian session. Asian session have small volume. Okay, Asian session, it have a small volume. Asian session. Now UK session is slightly bigger than Asian session. UK session will, that is the science and M5 time frame. Okay, in UK session you have a this sort of thing. Okay, and US session you have this sort of volume. Okay, so volume of Asian session is less than volume of UK session. That is a UK session and that's a US session. So US session have more big volumes, UK session have more less volume than US session, and Asian session have more less volume than UK. So what is the concept of ultra high volume in that case? In Asian session we will compare the ultra high volume within that category, okay, we compare it with previous 20-30 bars, then that's ultra high volume. Okay, in UK session we compare it with still 20-30 bars, that is the ultra high volume. In US session we compare it with previous 30-20 bars, that's ultra high volume. Okay, so that's very important. So ultra high volume, where is an ultra high volume? Let me tell you, UHV. That's an ultra high volume. Okay, that's an ultra high volume. Getting my point? This is ultra volume. That's why it gone up from there. That is ultra high volume. Look at that. On green candle, there's ultra high volume. That's why it came down. Okay, that's ultra high volume there. That's why it came down. On green candle, there's ultra high volume, means that's bearish sign. So any volume which highlight itself, it's like telling 10 to 15 people to stand in front of you and you choose the tallest one. That's an ultra high volume. Okay, that's an ultra high volume. Okay, now go to history. That's an ultra high volume. Okay, that's where smart money is play ultra high volume. Look, that volume is bigger than previous 30 volumes, so that's an ultra high volume. Okay, these four are ultra high volumes. These are ultra high volumes. All fours are ultra, because all are bigger than previous 10 to 15, 20 to 30 volumes. We have to compare in H1 and M30 time frame. We have to compare volume with previous 10 bars, 10 volumes. But in M30, in M15, in M1 and in M5, we have to compare volume with previous 20 volumes. If it's bigger, then it is ultra high volume. And obviously market gone down, because on green candles, if there is ultra high volume, means there is a selling in the market. Now again market going down. So on sell candles and ultra high volume, market started going up. So that's again UHV volume, ultra high volume. So there is also, and this volume is also bigger than previous 15 to 20 bar. This is also an ultra high volume. This is also an ultra high volume. This is ultra high volume. This is ultra high volume. Any volume which is spiky is an ultra high volume. Simple as that. This is an ultra high volume. UHV. UHV. This is ultra high volume. This is an ultra high volume because this volume is bigger than previous 15 bars. So this is an ultra high volume. Look at this volume. These two volumes are bigger than previous 10. So that's an ultra high volume. First we have to pick the ultra high volume, then we see the candle. If candle is red, that's buying. If candle is green, that's selling. Ultra high volume on red candles mean it's buying. So that means if you zoom out chart like this, then these spiky volumes are ultra high volume. Simple as that. No confusion in it. This is an ultra high volume. 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 So ultra high volume, where it is coming green, then market going down slightly. Where it is coming as on red candles, if there is ultra high volume, that market is going down. You have a question that market is coming down in small version, but market is going down huge, because trend is bullish. If players are aligning themselves within trend, then they get the big position, they get big moves. And if they are trading against this trend, then they get small moves. Simple as that. Okay, M1. Now that's M1 time frame. So what is the ultra high volume in M1? So in M1 you have what you have to do, you just zoom out chart. Just zoom out chart. Okay. Spikes, check the spike of volume. These are the ultra high volume. Here smart money is doing something. These are ultra high volumes. These are ultra high volume. Look, there is an ultra high volume. What market did? Market gone down. There is ultra high volume. What market did? Market gone slightly up. This is a 1 minute chart. Now this is an ultra high volume here. Okay, on bottom. On top I win. On top I guess. There is a volume on top and market gone down. 1 minute is slightly tricky because as in I told you in my this lecture, this volume lesson 7, that you have to use M1 time. Don't use M1 time frame or M5 time frame in US session. You have to use M1 time frame in Asian session and M5. You have to use M5 and M15 time frame in UK session. You have to use M15 and M30 and H1 session time frame in US session. Don't apply M1 in US session. M1 only applies on UK or Asian session. Okay, that's a spiky volume. Again, that's a ultra high volume. Where I am putting an ultra high volume indication means smart money is active there. And what they did, they enter as buy or sell, but on sell candle they you do the buying, so market gone up. Got your point? Okay, so this is a high volume, this is a high volume, ultra high volume, ultra high. Okay, and it's coming on green candle. So that's a green candle. Look, that's a green candle. Market gone down. So just compare the volume. In M1 you have to zoom out and just see if it is spiky volume, then previous all volumes like previous volume in that session, that's a ultra high volume. In M1 chart you have to zoom out the chart and compare it with previous whole day volume. If that's bigger than the previous whole day volume, it's a ultra high volume. Simple as that. You have to do this in M1 time frame. Okay, you have to zoom out chart. Okay, so you got the point. Basically I am telling you that so I told you, I think you got the point. Point is, smart money, who are smart money? Those guys or those big players or those hedge fund managers or central banks or whatever they are, who are making money from the market. We collectively call them as a smart money, whether they are big players, small players, or whatever else. Those players who know the market very well, they have a very, very big account, they have a deep pocket, they have a best resources, best knowledge, best data, best expert team, best fundamental analysis team, best technical analyst team, they have a best risk management team. They know the market very well, they know the politics of the world, they know the politics of the market, they know the condition of the market, the liquidity of the market, and they know everything. So in this way they know the market very well, whether it is really bullish or bearish, and they know how the current news will affect the market on the longer run. They know everything. They are called the smart money. So what we as a trader do, we track the footprints of smart money through volume. We track the footprints of smart money through volume. Tick volume. Tick volume. Tick volume is not a real volume, but as we use tick volume as a proxy of real volume. Okay. So if volume is spiking like greater than previous 10 to 20 volumes, then it's called ultra high volume. Ultra high volume is basically the point, the first indication that smart money is active into the market. Smart money is doing something, either they are buying or selling. What they are doing, if ultra high volume comes on bearish candle, then it means smart money is buying. And if ultra high volume comes on bullish candle, then it means smart money is selling. So all you have to do is to read the chart and wait for the ultra high volume. When ultra high volume comes in, you just be active on charts. You have to realize that something coming for B. If smart money is active, you have to be active to track the footprints of smart money and utilize market and make profit from that situation. If smart money is doing something, it means that market is high probability chance that market will move somewhere considerably. Hello, 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 hello. So that's it. That's the point of in this session we actually discussed the ultra high volume. Ultra high volume is the indicator for smart money. Ultra high volume is basically the indicator of smart money. Okay, so this was the session in which I have to tell you that what is an ultra high volume and how we can search and how we can see the ultra high volume in the markets. Simply compare the volume with previous 10 to 20 volume, that's called ultra high volume. And if you are trading in a M1 time frame, then just you zoom it out, zoom the chart. If there is wherever you see the spike in the volume, compare it with previous whole day. If it is spiking, that's an ultra high volume. That's an ultra high volume, UHV. Just compare it with previous whole day. Simple. In M1, in 1 minute chart, you have to compare the volume with previous whole hours. If you are trading Asian session, then compare the volume with previous 2, 3, 4 hours. If a volume is spiking, that's an ultra high volume. If you are trading in a UK session, compare it with previous whole day. If that's an ultra high, if that's a huge volume, that's an ultra high volume. Simple. In US session, if you compare it with previous whole day volumes, if volume is spiking and bigger than previous whole day volume, that is ultra high volume. Simple as that. So you got the idea, ultra high volume. Why market buy on sell candle and sell on buy candles? You when you read this book, Master the Market, you will realize that why it's happening. Okay, that's why I tell you that read this book 2 to 3 times. Okay, that will help you to indicate that what what are the ultra high volumes. Okay, volume surges in market, and you read all this book and you will realize all in by yourself. Okay, that's it from me. And I make sure that I told you the idea that what ultra high volume is. That was very important. And ultra high volume basically is the indicator of smart money, and we track the footprint of smart money through tick volumes. And when we see the ultra high volume tick volume, that means the smart money is active in the market, and that is we call as ultra high volume. And the behavior is ultra high volume comes on bearish candle means smart money is buying, a market will go up. Ultra high volume coming on bullish candle means smart money is selling and market will go up down. Okay, that was my point. Thank you.